NVIDIA stock investors are pretty excited today. The stock is up nearly 2%, sitting at $147. We are so close to our 52-week high of $153. Now, unfortunately, there are a lot of negative press coming in with NVIDIA and insider selling. And I want to kind of control a lot of that fear, uncertainty, and doubt impacting the overall stock right now. We also do have some pretty cool updates impacting NVIDIA in general. So let's take a closer look in today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so first, what I want to start off with NVIDIA before we look at this selling news is just kind of look at NVIDIA's valuation and compare it to where it historically trades at. Especially as we're getting closer to that 52-week high, a lot of people are going to start wondering, Jose, is this where the top is for NVIDIA? Now, NVIDIA is my number one position, major position in my overall portfolio, and I am not selling any shares anytime soon. I do want to say at these prices of 150, I'm also not that excited to be buying either, if that makes sense, right? Bullish long term, but maybe not for new money, more for my old money that's just sitting there holding a nice position size. So I want to jump in here to fiscal.ai to kind of just look at a few forward valuations. So the first one I want to look at is forward PE ratio. And this is actually going pretty far back, is going up to January 16th, January of 2016. So more than a decade ago. And the median forward PE ratio throughout this whole time. I'm a favorite fan of median opposed to the overall average, and the median is at around 33.17. Right now, this company's forward PE ratio is sitting at roughly 29.73. So if you were to look at forward PE ratios in about a decade time frame, you can see that NVIDIA is actually trading below its mean. Now, we're going to look at another one. We're also going to look at price to sales ratio. I do think forward price to sales ratio is also a little bit important to look at. Now, if we look at this metric valuation, this is a company that is definitely trading a little bit above its medium compared to 2016. And I'm going to move the needle a little bit more to 2020 so we can see how things change. But since the median since 2016 is about 12.39, 12.4, and right now it's trading at around 16.5. So not that crazily overvalued in my opinion, but a bit overvalued compared to where historically trades at. I do want to say this company during this whole AI era has traded at crazy valuations, much crazier than now. We've seen some around here in the north 20s. We can see here in 22.8. This is when maybe I start to get a little bit worried in the short term of things. Now, I actually want to move the date here, and maybe this is a different company from 2016. It's actually a very different company from 2020s, but this is now starting from May 2020th, because the AI era really didn't start till this end, till 2022, 2023. But now if we look at the forward price to sales ratio here, it's sitting at roughly 16.28, and this is actually on par of where NVIDIA has been trading for the past 5 years. And I actually like this really quick. It kind of showcases that in this AI era of NVIDIA right now is not crazily, it's pretty much on par valuation to where it normally trades on forward price to sales ratio. So if we continue to see a scale up and we continue to see growth in AI demand, I do believe that now NVIDIA is kind of getting to these levels of all-time highs at great valuation presence, right? Like I mentioned, in the past, we've seen this go up to like even 23, 24, and 25. Now, in this same time era, forward price to earnings ratio, the median is about 38.43. Right now, it's trading at 29.73. So forward PE is definitely trading at a cheaper valuation. Now, one thing that has changed for NVIDIA throughout this time is gross margins. Gross margins have improved dramatically. So I think if you believe gross margins are going to stay at these levels, maybe the PE ratio is the better indication. If you're expecting maybe some weakness in gross margins, maybe price to sales ratio might be a better metric to look at, because one is obviously more impacted by that gross margin number. So I personally do believe gross margins will continue to be in the 70% range for a while. So I'm more of a forward price to earnings guy for NVIDIA right now. So just wanted to share that. And if you ever want any cool charts like that, make sure to check out fiscal.ai/Jose. You get 15% off, no coupon code needed, directly at checkout. I have the annual pass and gladly pay for it and use it on a daily basis. So just wanted to share that with you. Next, I want to kind of jump into the main topic of today's episode. And we also have some other topics outside of this, but NVIDIA insider trading. And this has become a major topic. I actually got a few questions during the morning live stream that we do on the channel here at around 8 o'clock Eastern time. NVIDIA insider trade alert. CEO sells $14 million NVIDIA stock as part of $865 million disposable plan. Billionaire, and then you hear even reports like this: billionaires, insiders just cashed out of NVIDIA. Is this the top? We also see insider selling. NVIDIA Corporation CEO sells 50,000 shares of stock about 19 hours ago. And we continue to see kind of a lot of these topics that kind of create maybe some fear of the uncertainty of maybe insiders are selling because they know something that we don't know. And here, if you go to the 10Q report, you can actually look for 10B 5 plan. And again, this is not only for NVIDIA. You can actually use this in any company. And a company can kind of tell you, hey, look, our insiders are going to have this plan to sell off some shares throughout the upcoming dates. So be prepared. So we can see Jensen Huang wants to sell about 6 million shares by December 31st of 2025. We also have Colette, which is the CFO, sell about 500,000 shares. And we also do see a director, A. Brooks Sewell, that wants to sell about 1 million shares. And we kind of see when they want to do this expiration of this plan. This 10.5B is to help kind of make sure that there is no form of insider trading and they just want to liquidate over time. Now, 6 million seems like a lot, but luckily, if you check out my free newsletter, whatthechip happened.com, I already did an article on this earlier, a few hours ago, and NVIDIA's co-founder and CEO Jensen Huang quietly sold about 100,000 split-adjusted shares on June 20th and 23rd for about $14 million. The firm trades under a Rule 10b-5 plan adopted on March 20th. The program lets him dispose up to 6 million shares, roughly, let's say $1 billion by December of this year. But even a full runoff shaved less than 1% of his amazing stake. So out of this 6 million shares, this CEO actually owns roughly $866 million. I forget where I put it here. I know I have the number here, but this Jensen owns about 866 million shares, 860 million shares. So even if he lets go of this full 6 million shares, it's about 0.7% of his stake. So as an insider, you shaving off 1%, imagine your portfolio and you're saying, look, out of my portfolio, I'm only going to sell 1% of my overall portfolio, liquidate it. Is that really anything meaningful? I mean, in this type of dollar sense, yes, but I don't think it's because of any change of the thesis in the stock. It's more just about maybe he just wants $865 million to buy more leather jackets. So this insider selling should not cause any fear, in my opinion. Now, what I want to talk about next is we did get some interesting updates coming in here for NVIDIA in their developer blog. And the developer blog doesn't get as much traction as some of their press release because it doesn't really hit kind of the SEC number, SEC filing, and wherever all this data is kind of sent on with things like Bloomberg. But June 24th, NVIDIA's Run AI and Amazon's SageMaker Hyperpod are working together to manage complex AI training. So NVIDIA Run AI and Amazon Work Services have introduced an integration that lets developers seamlessly scale and manage complex AI training workloads. Combining AIW SageMaker Hyperpod and Run AI's advanced AI workloads and GPU orchestration platform improves efficiency and flexibility. So this is not something that, in my opinion, drives the stock up or down, but it does kind of showcase that NVIDIA is still working pretty much on par with a lot of these cloud service providers to make sure that NVIDIA is the best platform platform there. So this helps kind of combat some of the competitors in the space if there is any. And it also continues to kind of fuel this adoption of more AI. If you make it easier to manage a lot of these AI training, you open up the market for a lot more developers and scientists to try some of these AI solutions, increasing the overall market. So I think that is very, very interesting there. The next thing is today, HPE is kind of having their GTC moment. It's kind of their annual HPC. I forget what they call it. It's HPE adoption, but it's happening in Las Vegas right now. HPE Discovery. So in this discovery, HPE, which designs a lot of AI servers, they obviously make a lot of laptops and stuff like that as well. The new lineup they introduced includes everything from modular AI factory infrastructure and HPE's AI-ready RTX Pro service to the next generation of HPE turns AI platform and HPE private cloud AI. The goal, give enterprises a framework to build and scale generative, agentic, and industrial AI solutions. So they kind of talk about kind of all these different platforms that they are making using various kind of NVIDIA solutions from various GPUs, from various networking solutions. What I find more interesting about this is really showcasing that the enterprise market is adopting AI at a faster rate, right? The enterprise market is definitely kind of a more new market for the AI industry. Has been mainly in the cloud service providers. So it kind of does feel that nice tailwind for this industry. The other thing that I want to mention is HPE did announce the HGX B300 system, which is obviously on NVIDIA's Blackwell Ultra, which is expected to come out in the second half. But they expect to start shipping servers in October. Now, for you to be shipping servers in October, it most likely means you're going to be getting chips of the Blackwell Ultra in September, maybe even in August, maybe even earlier than that. But regardless, it does seem like the Blackwell Ultra ramp is going amazing, and this is going to be the killer revenue growth driver, in my opinion, for NVIDIA. I think the market is underestimating how much Blackwell Ultra is going to do. Now, inside of this technical blog, there are also another thing that they released, and it kind of focuses more in the industrial robotic space and how NVIDIA's software solution and kind of operating system, the ISIC product that they use for training and simulations of robots, is being used by a lot of companies. So as industrial automation accelerates, factories are increasingly relying on advanced robotics to boost productivity and operational resilience. The successful deployment of robots depends on capabilities like precise motion planning, accurate spatial perception, and robust obstacle avoidance. AI-enabled robotics and software-defined automation help make factories more autonomous, scalable, and resilient. High-performance robotic software is essential for modern manufacturing. They actually even talk about different companies using different types of ISIC manipulators to help grow, and they actually gave some pretty cool use cases. If you are focusing the robotic industry here, check out this blog. They also talk a little bit about it here in a press release as well, where NVIDIA and partners highlight next generation robotics, automation, and AI technologies at Atomica. So here you see a lot of robotics, and you also see a lot of private and maybe some public companies that are working in the robotic space. So not only am I excited about the push of AI in the enterprise space, we can see that the robotics market is also a very, very important one. So right now, the amount of tailwinds, in my opinion, for this company is pretty strong. Regardless, like I mentioned at the beginning or somewhere in this video, I am a big shareholder of NVIDIA. At these moments, I'm not really purchasing, but I'm definitely not selling. I believe this is a stock that can definitely outperform the market for numerous years. I think for my risk to reward ratio, we look at those cool charts here on fiscal.ai. Remember to check out the link down below if you want 15% off on the platform that I use every single day. Finally, if you want to hear my thoughts on AMD or Google, I recently just did 2 videos on that as well. So make sure to check that out. Take care, have a good day, and see you all next time.